Typically, like when we work with, people in the cannabis industry, there's really three main concerns that come up, and I'll kind of address each of them individually. The main one is that, people are just frustrated and, worried that they're paying too much for their insurance. It's reducing their cash flow and they're not able to, use that money in other places throughout the business, where they really need it. And, with that, we've got access to every carrier that works in the industry, which allows us, at worst case, if you work with MFE, we can guarantee that you guys are in a really good spot with where your insurance is set up, cost wise. The next kind of key concern is usually, people read through their policies and they're just not really sure, what's covered, what isn't covered, how a claim will pay out, et cetera. This leads to people, either buying coverage that, isn't necessary, and then occasionally, uncovered claims or coverages that, would be very vital for the business to have, not being in place. The first step in our process is always a comprehensive policy review. Take a look at, every piece of that policy, where the limits are, and, first call is very much supposed to be educational. I want them to understand, what they have right now, what we would be able to do to help them out, to kind of better structure that, and, really working with them to get a better understanding of, how that policy works. There's a couple of big things that will come up usually. The main one is what's called a co-insurance provision. Usually when people think of co-insurance, they think of, health insurance, obviously, but commercial property insurance usually has like what's called a co-insurance requirement. And what that essentially means is that, we need to insure up to 80% of the value of a business. If you don't insure up to 80% of the value of the business, there's a penalty that's applied to that claim. So an easy example to kind of use on this is that, I've got a building that's valued at $1 million. I was trying to save on my insurance costs, and I had it valued at about $500,000. Maybe I built it 20 years ago when everything was much cheaper, and just kind of had to move those limits along very much. When you do the co-insurance penalty, it's, the amount that you did insure it divided by the amount that you should have insured, and then that percentage is multiplied by the claim. So instead of getting, that full $1 million claim payout when that building has an issue, the maximum amount you're going to be able to claim on that is 5/8 of the 500K. So that total claim would be 312,500, and that's before there's any deductibles. So that's kind of one of the first places we look. We got to make sure that, if you own your building, or, you've got a triple net lease and your landlord owns that building, we don't want to have any issues if there's a, fire or something along those lines, and, that policy doesn't have enough coverage to kind of step in there. The next kind of main thing that comes up a lot would be, when it comes to inventory coverage and really theft claims in general. Inventory coverage, for it to apply for 90% of carriers, it's got to be in a locked vault or safe, mostly overnight, but a lot of times just in general. So, if a company doesn't have, the proper processes in place where they're locking stuff up overnight, they don't have a lot of product on display, et cetera, that coverage just doesn't really make a lot of sense. It's very expensive. And, if there's a break-in overnight and the stuff's out in the open, we're not going to be able to get an insurance claim played out anyway. So a lot of times we're kind of working with clients to get them an understanding of how that works, or, kind of moving around how they're storing product, et cetera. The other main thing is that, recent years, we've been seeing a lot of product withdrawals. Standard product liability policy is going to exclude coverage from any product withdrawal. They'll usually offer some sort of an endorsement that's going to provide what we would call first party coverage. That's just going to be your direct cost from that claim. So whether that's, getting product off the shelves, disposing of that product, or notifying, all the customers, that's really the only intent of that policy.